This is by far my favorite investing tool. If you want proof that building wealth is possible and the motivation to do it, you need to use this tool at least once. I'm James, a financial educator from moneystalker.com, and today we're diving into how a regular investing calculator can help you plan your financial future. This calculator shows you that investing just £4 a day from your early 20s could potentially give you $500,000 or more at retirement. Now, that's not a guarantee. Nothing in investing is. The calculator uses past performance to estimate future returns, and that's not always reliable, but it's still a powerful tool. Let me show you how it works. If you invest £4 a day, that's £120 a month. Let's plug that in. We'll set our initial investment amount to £120 and continue that amount every month for the next 40 years. We'll use the MSCI World Index as our benchmark. It tracks the global stock market's average return. Look at this, based on historical returns, the calculator projects you could retire with over £500,000. Now, here's what's really interesting. £120 a month for 40 years only adds up to £57,720 of your own money. That's the green section on this graph. The rest, nearly 10 times that amount, comes from your investment returns. This is the power of compounding. As your pot grows, your returns start earning their own returns. That's what creates this steep curve. The longer you invest, the more powerful compounding becomes. Now, let's dream a little bigger. If we use the S&P 500 as our benchmark, which tracks the 500 largest companies in the US, our projected return jumps, and you could become a millionaire from just £120 a month. But let me be clear, I'm not recommending the S&P 500 as your investment. I've picked a top performing index here to illustrate the concept, but there's no guarantee it will continue to perform at this level. In fact, there were periods in the 20th century where the S&P 500 underperformed the rest of the world. This is why it's often smarter to assume lower returns, so you're not left disappointed later in life. Let's take a look at a lower return scenario. Right now you can get around 4.7% in a cash savings account or money market funds, which sounds pretty good, and these are extremely low risk too. But notice the difference. Instead of nearly $1 million, your 40-year return drops to £160,000. We're also not factoring in inflation. If we assume it runs at 2.5%, that means your £160,000 will be worth significantly less in real terms in 40 years' time. This highlights a key lesson. To grow your wealth significantly, you need to invest and take on some level of risk, but the level of risk is personal. Only you can decide what's right for you. It's tempting to look at this graph and say, well, of course, let's go for the highest risk and the highest growth, but investing doesn't work like that. Investment returns aren't linear. Even though this graph looks like a smooth curve, it's showing an average return. In reality, markets fluctuate. One year you might be up 30%, the next down 30%. This is a limitation of the calculator. If you're looking at periods of 5 years or less, it becomes even less accurate. It's really a long-term financial tool. It only becomes useful when you start looking at investment horizons of 10 years or more. So now it's your turn. Open the calculator alongside this video. It's linked in the description below. Think about the number you're aiming for and let's work backwards. Let's say you need £450,000 in 25 years' time. We'll adjust the investment period to 25 years to start, and start with £1,000 as the initial investment. We'll be using the MSCI World Index as our benchmark. At £120 a month, we're falling short. We'd only have £134,000. So let's increase our monthly contributions until we get to our target. £220, still short. £320, closer but not quite. £420, now we're on track. What if we assume lower returns? If we lower the expected return to 5.5%, either because you prefer safer investments or expect a lower market performance, we now need not $520, not $620, but £720 a month to hit our $450,000 target. If that's unaffordable, we need to change one of the parameters. For example, we could choose to invest for a longer period, say 30 years instead of 25 years. This will reduce how much we need to invest each month. As we go through this exercise, hopefully you're starting to see how your goals, your risk tolerance, your time horizon, and even your ability to invest all shape your investment plan. But once you've locked down a plan, it's simply about executing on it consistently over time. And this is where automation can help. InvestEngine's savings plans make regular investing seamless. Instead of manually making deposits every month, you can set up automatic investments into globally diversified portfolios that match your risk level. They make it so you don't have to worry about forgetting to invest or second guessing your contributions. Your plan runs in the background, working towards your goals while you're asleep. InvestEngine takes the concept of regular investing and makes it a breeze. That's why I love their platform and why I'm doing this video. Combine that functionality with this calculator and you've really got everything you need to stay consistent and build wealth over time. It's that simple. This calculator isn't a tool, it's your personal motivator and financial planner all in one. Use it to set realistic goals, track progress, and build an investment habit that works for you. If you found this video helpful, give it a like, share it with a friend, comment below with your investing goals. I love to see them. And don't forget to subscribe for more tips and tools to help your money grow. Start small, stay consistent, trust the process, and your future self will thank you.